dream home can turn into a foreclosure nightmare. Millions of people lose their homes each year because of debt-related mistakes they didn't see coming. In this video, we uncover 10 common debt traps that could cost you your home and how to avoid them. Mistake number 1, ignoring interest rate adjustments. A low initial interest rate may seem like a sweet deal, but when those rates adjust, often after the first few years, monthly payments can skyrocket, leaving homeowners struggling to keep up. This hidden trap has pushed thousands into foreclosure when they couldn't handle the jump. Professional help tip on this mistake. Work with a mortgage broker to explore fixed-rate mortgage options if you currently have an adjustable-rate mortgage, also known as ARM. A broker can help you refinance before rates increase, securing more predictable and manageable payments. Consulting a financial advisor to understand potential rate adjustments and how to prepare for them can also prevent unexpected financial burdens. Mistake number 2, over-leveraging home equity. Tapping into home equity for quick cash might feel like a smart move, but many don't realize they're risking their house. By treating their home like an ATM, people pile on debt faster than they can repay it, leading to foreclosure. How do you avoid mistake number 2? Consider speaking to a credit union or mortgage advisor for tailored advice on using home equity responsibly. They can help you assess whether a home equity line of credit, HELOC, or refinancing is the right move based on your financial goals without overextending your debt load. Credit unions often provide free workshops on managing home equity. Mistake number 3, skipping budget planning. Buying a home without a solid financial plan? That's like sailing without a compass. A mortgage is a long-term commitment, and without budgeting for maintenance, property taxes, and emergencies, homeowners often find themselves in over their heads. How to avoid mistake number 3. Before purchasing a home, work with a financial planner to establish a realistic budget that includes all potential housing costs, taxes, insurance, repairs. They can guide you in using mortgage calculators to accurately estimate payments and prepare for future expenses. Mistake number 4. Relying on future income. Counting on a raise or bonus to cover future mortgage payments. A dangerous gamble. When income doesn't grow as expected, that big house starts to feel like a burden. Countless homeowners have lost it all by betting on tomorrow's paycheck. How do you avoid this mistake? Seek guidance from a financial coach to develop a debt-to-income ratio plan that aligns with your current income, not speculative future raises. Financial professionals can help assess how much house you can afford now, ensuring you don't overextend. Mistake number 5, taking on too much debt. More debt means more risk. Homeowners already managing student loans, car payments, or credit card debt find themselves unable to juggle a mortgage on top of it all. The more debt you pile on, the faster things can unravel. Avoiding mistake number 5. Consider working with a debt counselor or certified financial planner to develop strategies for managing and reducing overall debt. By consolidating existing loans and prioritizing high-interest debts, you can lower your financial burden and improve your mortgage eligibility. Mistake number 6. Falling for adjustable-rate mortgages, ARM. The low initial rates of ARM are tempting, but when rates adjust, monthly payments can soar out of control. ARM have been a ticking time bomb for many, exploding into unmanageable payments and foreclosure notices. How to avoid mistake number 6. Before signing an ARM, consult a mortgage advisor to evaluate whether a fixed-rate mortgage might be a safer long-term option. A mortgage broker can compare different loan options based on your financial situation and offer alternatives if ARM pose too much risk. Mistake number 7. Underestimating property taxes and insurance. It's not just the mortgage payment. Property taxes and insurance costs can dramatically increase over time. Failing to plan for these hikes often leads homeowners to financial distress, forcing them to sell or face foreclosure. Avoiding mistake number 7. Financial planners can provide a comprehensive view of ongoing costs, including property taxes and insurance, helping you budget effectively for homeownership. They can also recommend escrow accounts for better management of these recurring expenses. Mistake number 8. Lack of emergency savings. Life happens, job loss, medical bills, emergencies. Without an emergency fund, homeowners are left vulnerable. It only takes one major expense to push a budget to its breaking point. Avoiding mistake number 8. A financial advisor or budget coach can help you create an emergency savings fund, ensuring that you have a cushion to handle unexpected costs like medical bills or job loss. This professional can also guide you in automating savings contributions to build this fund consistently. Mistake number 9, not refinancing when needed. Timing is everything. Failing to refinance when interest rates are favorable means missing out on potential savings. Homeowners stuck in high-interest loans often watch helplessly as their payments grow, eventually losing their homes. Avoiding mistake number 9. Consult a refinancing specialist or mortgage broker to review your current mortgage terms and explore better refinancing options. They can help you take advantage of lower interest rates, reduce monthly payments, or access equity, all while avoiding high closing costs. Mistake number 10. Co-signing on someone else's debt. Co-signing a loan for someone else is risky. If they default, you're on the hook. Many have lost their homes because they co-signed a loan they couldn't afford to pay back when the other party failed. Avoiding mistake number 10. Before co-signing, consult with a legal advisor or financial planner who can explain the full scope of the risks involved. They can help you assess whether your finances are resilient enough to handle another person's debt in the worst-case scenario. Owning a home is more than just a financial decision. It's a long-term commitment to stability and security. Avoiding common mortgage mistakes starts with education, careful planning, and seeking professional guidance when needed. By staying informed, budgeting wisely, and relying on proven techniques, you can safeguard your home and financial future. Remember, it's not just about getting a mortgage. It's about making smart, sustainable choices that protect your most valuable asset, your home.